Good evening, everyone. Futures Brizio here, 10:15 on Friday, January 3rd, 2025. And Happy New Year to everyone. Hope you had a great holiday season wherever you were, whatever you did. And just hope it was enjoyable. And I hope you have a really good, prosperous, happy New Year in 2025. And here's to peace and prosperity and good luck in the markets. So, um, so, and I apologize, I've been away, but obviously, as I mentioned in the last video before the holidays, the volume really does tend to dry up between Christmas and New Year's. So this coming Monday, the 6th, will probably be, the first really high volume trading day since before Christmas. Actually, probably since before Christmas Eve. So, I took some time off. I'm not saying I didn't trade at all, but I traded very sparingly over the last basically at least 10 days, 10 days to 2 weeks. So, but like I said, things should be starting to pick back up on Monday. So, so today's video will be just again talking about some potential setups maybe on the trading with against market sentiment, and also we'll do a quick touch base on futures and what I'm doing now with futures. So I'm kind of back to splitting my time a little bit between Forex and futures again, but I have completely different strategies. Forex, I'm using just strictly this market sentiment information. Futures, I'm using a little bit of that. There's not a lot of really good market sentiment in futures. And in my back testing, I do have to say that the market sentiment strategy works better with Forex than it does with futures. I'm not really sure why, but that does seem to be my experience so far. I'm not saying I've abandoned it. In fact, I am still using market sentiment to get general direction, but I'm not relying on it nearly as much as I do with Forex. So we'll get to a couple of charts with that, and we'll just talk about a couple of quick things. So this video might be a little bit longer. And as always, make sure you smash that like button, subscribe to the channel before we get going here. And again, any questions or comments, leave them down below. So remember, guys, this client sentiment strategy is essentially just using market sentiment that is accumulated on these graphs, which basically is supposed to represent retail traders where they stand on a particular pair, what their ratio of long to short is. And the idea is that since most traders lose money in the retail space, that you should do the opposite of what they do. And so this is one way you can do it. So we're going to talk about the Aussie Swiss. So the Aussie Swiss, you can see currently approximately 70, where are we as of today? 80% of all retail traders are long this pair, and therefore obviously only 20% are short. Represented by this blue area is the 80%, the red area is the short. So based on that, what would you be looking for? Well, you'd be looking for shorts. And as you can see, this market has been in a downtrend for at least 3 months. I mean, these graphs only go back 3 months. Remember, these are daily candles. But at the whole time, from back here going up, the long positions were actually increasing as the price went down. Okay, so this is a perfect example. Okay. Now, the other thing I wanted to say is, but you don't just trade this in a vacuum. You still want to use things like market structure to determine when it's a good time to get in. So in other words, you don't want to say like right here at this candle, oh, this market's in the downtrend, I'm just going to jump in right here. Okay, right in the middle of like an impulsive move down. It's like trying to catch a falling knife, and then the very next candle price proceeds to go up for the next like week or so, and you'd be like, oh, this strategy doesn't work. Well, it's not the strategy. The strategy works fine. It's that you got in at a terrible time. You got in at the end of an impulsive move instead of at the beginning, waiting for a pullback. So just like any price structure strategy that we've talked about on this channel or you see anywhere else, you want to wait for a market structure shift before you get in. Now you don't have to do that on the daily chart because you might miss out on quite a bit. The market shift, basically happened right here on this big red candle. But basically what I'm doing is when I start to see a pullback, like we had here, we had this low put in, price pulled back. I'm going to then go and drop to a shorter time frame, maybe initially down to like a 1 hour. And I'm going to look for a shift back in the direction of the main trend. So on this pair, we're only looking for shorts, and we're just waiting for price to pull back enough, look for a shift in the market on the lower time frames, and then enter. The other thing which can really vary from one pair to the next is to look back in time and, if the market's been trending, how many days in this case is the average size pullback? Well, there's like 6 candles here. We go back over here. There's 5. We go back over here. 1, 2, 3, 4, 5, 6. This one's a little bit bigger, right? 1, 2, 3, 4, 5. Not really, actually. So you can just be pretty confident saying, okay, when this pair pulls back, it's going to pull back for anywhere from 4 to 6 days before the trend continues. And so now here we are right here. 1, 2, 3, 4, 5, 6, 7. 7 candles. And then looks like maybe today we're starting to pull back, but we're starting to resume the trend. But you look at this candle, it's like, well, this red candle is not very big. So how do I know if this isn't going to keep going back up? Well, again, it's actually more candles than all these other pullbacks. But the other thing is you've got to go to a shorter time frame. Okay. So again, remember, we're only looking for shorts on this. Okay. So now we go over to the Aussie Swiss, and here's the daily chart. So here's that pullback. Let me just zoom in a bit. So here's that pullback we just saw on the yellow chart. Okay. And you're like, okay, and you can see I'm in this trade now. I let this run over the weekend. Obviously, market's closed now, I'm going to take the risk that this is going to keep going down because it looks like great market structure, right? Lower highs, lower lows, lower highs, lower lows, lower high, lower low, lower high potentially, and now down. The other thing is if I go to a shorter time frame, okay, well, you can see on the hourly chart, the last swing area took us like right here. And, so then I waited, price broke and then pulled back and then I got in. If you wanted to go to an even shorter time frame, you wanted to be even more aggressive, well, you probably actually could have gotten in right here on the close of this candle, which certainly would have been a better fill than I got, but it just depends, when you want to get in, okay? So there's your shift back to the downside. And we're going to assume now the downside is going to continue. Okay. Let me get rid of this old line back here. Okay. So now we see price going down. This is the 15-minute chart. We go back out a little bit. Okay. Now, what is a good target area? Well, if the long-term downtrend is going to continue, then a good target is going to be, somewhere in this big liquidity zone from way back, in August. If you wanted to, be a little bit more, cautious about your targets, then you could say, okay, well, here's an initial target down here. This is the 4-hour chart. This one down here, and you get the point, and then back towards the original lows. Chances are, if price comes down, it probably will go right through these. If it gets through this first one, I think it'll go right through them. But, there's always a possibility that it finds demand in here and it goes back up. Okay. So that's just an example of using this strategy on the Aussie Swiss. So remember, you don't want to just trade these blindly. Okay. So the steps are basically look for a divergence in the sentiment, and they show you right up at the top here. All right. This one is currently 80% long, 20% short, as we said. So we know we're only looking for shorts, and then we're going to wait for a pullback. Use previous pullbacks if it's helpful to try to give you an approximate area or number of days it would take for the pullback to take place, and then you just want to monitor the shorter time frame. I would say, again, start on the hourly time frame. If you want to fine tune, if it looks like things are shifting back, maybe jump down to an even lower time frame to try to, find a better entry. But, I'd go from the day down to the 1 hour. Sorry, guys, I didn't get a drink. Okay? So that's basically all it is. So what I do for this, guys, is I created this little, there's nothing technical here, guys. It's just a little Excel spreadsheet I created. So every day I print one of these out, and I look through, once the daily candle closes, I look through, these are the 20, I think there's about 22 pairs here. 22 pairs. And this only takes me, it only takes me about 5 to 10 seconds per pair. And I just make a note, what direction is the, am I looking to trade in? And that's only if there is a bias of at least 60-40. So let me show you one that's not. This is the pound yen. As you can see, as of today, we're at 47.53. See right here? Well, you can see right there in the middle, 47 long, 53 short. The ratio needs to be at least 60-40 or 40-60 or better. So this is a pair I would not even look at. So I will not even look at the pound yen just based on that. Okay. So if I go back to my spreadsheet, I'm assuming that we have a ratio of at least 60-40, 40-60. For the pound yen, I would just leave this one out. Okay. And then I would look and say, okay, well, is price in a pullback or is it in the middle of an impulsive move? Okay. If it's in the middle of an impulsive move, then you've kind of missed the boat. You just want to wait for another pullback. And then if it's in a pullback, then I'm saying, how close are we getting to nearing a trade entry? Like that Aussie Swiss, well, we're already in that. But there's lots of other ones that are maybe getting ready to, enter back in again. See if I can find one really quick here. Maybe Euro CAD. I'm just looking at my list from today, actually. If I go to Euro CAD. Yeah, so this one, we're looking for longs, right? So you can see as of today, we're at 75% short, 25% long. And we were in a pullback. See, we had a 3-day pullback, and then we've had this big bullish candle right here. So that's why I would count that one as potentially, no, actually this one is, and I didn't take the trade on this. I kind of kicked myself. So if we go down to the Euro CAD, which is right here, you can see daily chart. Remember I said, look, we're looking for longs. Look down to the 1 hour. Look at this huge run up. Okay. Now, granted, we had this big push down. This is a liquidity grab. Just kind of go down, push the market down just to run it back up. Okay. Then we had this little bottoming out. Price came back up. This would have been your entry right here. Okay. And you could have, you can see price just rocketed up today. Okay. So if price, obviously takes out this high, then it's probably going to go a lot higher. But there's an example of where price is, at or very near an entry. Okay. So we had the pullback, and then we start to see bullish price action setting up on the daily chart. And then we go down to a shorter time frame and look for that shift in momentum back in the direction of the trend. Okay. So I hope that answers that. So again, identify the divergence, wait for the pullback, wait for the market direction to shift, and then look for your entry. And so that's basically what this, little cheat sheet that I created. And I basically do this every day after the daily candle closes. Like I said, it takes me literally seconds per pair, and I just, take a pen, just like, trade direction, long or short. That's not going to really change. Are we in a pullback? Yes or no? And if we are in a pullback, how close are we to are we getting near an entry, or does it look like the pullback's still continuing? Okay. And that's that. So that's our market sentiment update, and that's all I'm doing for Forex, guys. Pretty straightforward, really easy filters to use. Just use the contrarian sentiment again. And look, guys, it's not always going to work. 70 to 90% retail traders are wrong. Well, that means 10 to 30% of the time they're right. Okay, so but as long as you practice good risk management, that still puts tremendous odds in your favor. Okay, so there are going to be times when the retail crowd is lined up with the actual market direction. That's fine. And at some point, that's going to shift, right? So if at some point this starts to turn up here, right, and this bullish sentiment starts to rise and gets above 40%, well, now the ratio will be less than 60-40 at that point. And at that point, I will not trade the Euro CAD until this spread becomes 60-40 or greater. Okay, but right now that's not the case. It's still a huge divergence. In this case, heavily weighted to shorts, which means I'm only looking for longs. But again, you're not always going to be right. That's just the nature of the market. It's a little bit of a game of odds, and you play, you find a strategy that has an edge, and you just play out the probabilities. And sometimes you're going to be right, and sometimes you're going to be wrong. But I have found this to be a pretty effective strategy. And like I said, it's very straightforward because it has very certain filters and parameters that you can use. You don't really have to deviate from that. You just follow that blueprint, and that's all you got to do. So, all right. And then the rest of it's up to you to practice good money management and, have good trade entries, good stop loss placement, good take profit areas, and just general good market psychology. But the strategy is pretty sound, and you just have to just follow the rules and execute it. So, all right. Let me take another drink. Okay. So we'll move on to futures now, and then we'll wrap this up. Okay, so a little bit different take on futures because I'm trying to split my time now. I've found that some of the market sentiment stuff on futures is not. I don't want to say it's not reliable, but I don't find it that it's adherent as it is for Forex. But in this case, I'm not going to go and show you the charts. This is copper. Last time I looked, copper was heavily net long. I mean, like heavily. It was like 95% net long. So to me, I'm saying, well, I'm only looking for shorts in copper. And clearly this market has been in a downtrend here for, honestly, since back here. Okay, since, what is this? The end of September. Okay, this market's been in a downtrend. So in that respect, hey, you have to give it a lot of credit. So let's talk about entries then. This is an hourly chart. And what I did for these futures is just to give me some reference points, especially since I'm not trading this exclusively, is I threw a 200 period simple moving average on here. Okay. And I'm basically just, not just using it as a guide in terms of entry, but in this case, places to re-enter the market. So price was going up here. Again, we're only looking for shorts. Okay, so we have a market structure break right here. Okay, that actually lines up with the 200 period moving average, which is really nice. So again, at this point right here, okay, again, remember, we're only looking for shorts here. Okay, so let's zoom out again. There's that arrow I drew, right? So price has been going up, and then we have that 200 period moving average down on the shorter time frame. Okay, so price was running up. It came up here, took out this moving average. Okay, well, this is actually a different time frame. So let's just stick to the 4 hour here. So price came up here, broke the moving average. Okay. Now you're like, okay, well, you're only looking for shorts here. So when price breaks through, does that mean the market is shifting back long? No, it just means that this is actually an even better place to enter. Okay, so because remember, we're only looking for shorts. So when do we enter? Well, price is going up here, making higher highs and higher lows, But until there's a break of market structure, we're not going to enter. And so it's above the 200. So now it has our attention that, hey, this is an even cheaper place to get into this, or actually more expensive place because you're going to sell it back. You want to get in up here, but you don't know where to get in. So you have this move down, okay, didn't take out this swing low. Price went back up, came back down, all right? It failed to close below here. Yes, it wicked below, but there was no close below here. So this red candle is a fake out, and then went up again, made another new high, and then finally right down in here it broke this structure from this swing, and it also was closed below the 200 simple moving average, and there's your entry back to the downside. Okay, so that's on the 4-hour chart. And then over here we had the same thing, only it didn't break the 200, but it was coming up, higher highs, higher lows, and then finally it broke structure right here. This would have been your entry. Okay, and on the 1-hour chart, here's just zooming in. That's this area right here. So we go back to the 1 hour. On the 1-hour chart, it actually broke structure right here. Okay, this is where it broke the 200. All right, but again, we're only looking for shorts. And then right here, price took out right here. So you could have entered here, put your stop above here as long as this area holds. Or you could wait for a pullback after that initial breaker structure, but you don't always get it. So it's a little bit of a risk. Yes, it would be great to wait for the pullback, but you don't always get that. Okay, sometimes the market just runs straight down and you miss the trade. So you could either enter here and you would have been in some drawdown, or you wait for a pullback and then you get in over here, which obviously this is better if it happens. Okay, but it's the same thing. We're looking for shorts. We're looking for a pullback. All right, where the pullback in this case is going to make higher highs, higher lows, and then we're going to wait for that market shift and get back in. In this case, it also lines up with the 200 EMA, which makes it even better. Or a simple move. It's an SMA, not an EMA. It's a simple moving average. Okay, and this makes it really nice to get up here. It's a low risk trade. You just wait for that shift. Okay, and like I said, it's a low risk trade. If you're wrong and price does go higher, so be it. But you have a very high probability just based on in this case, the market sentiment and the structure shift in the market. Okay. This is the DAX. So I know I haven't mentioned this much. I actually I'm liking the DAX a little bit more than I do the ES. The DAX is the German stock market. So here we have NASDAQ and S&P. The DAX is the German stock market. I don't know what DAX stands for. It's a German name, I suppose, but this is the German stock market. Probably equivalent to like the S&P. Okay, so we had been going up here, and now we've been heading back down. Now, I can tell you the sentiment on this asset is to the upside, but we've had obviously a substantial move here to the downside. We had price break the moving average here. So you could just trade this just based on the break of the moving average. If you said, yes, okay, the sentiment is positive, but hey, we got a good trading opportunity to the downside here. We broke the moving average right here, came back, retested it, and went down. This would have been a great entry anywhere here or at the close of this candle. Okay, but so whether you want to do that counter trend or not, let's just put that aside. The fact is now we're looking, the market sentiment is saying this market should go up. So let's see what happens. We have been now in a consolidation phase since about December 20th. So for the last basically 2 weeks, we've been moving sideways. You can clearly see the upper and lower boundaries. So yes, we're trading below the 200 simple moving average, but we have positive market sentiment, okay, where the market should be going up. The traders are highly net short this market, so you would expect that this is going to go up. Okay, so a couple of scenarios here. If the market sentiment is correct, then what price will do is eventually we'll break out of this zone, come back and retest it, and then we'll just go higher, right? And we'll just drag this up here if I can. No, it's not going to let me. Yeah. Okay. So this is based on the market sentiment. This is the most likely scenario that price will eventually break out of this consolidation movement, maybe break it back above the 200, come back and retest it, and then go. The other thing is, if this wants to continue down, then we'll have a liquidity sweep where price will break above these highs, sweep out the liquidity and the stop losses sitting above here, with breakout traders or traders maybe that are short the market, and it comes up, sweeps them, takes them all out, pops back above here for a second and then continues down. So those are the two scenarios. Again, based on the market sentiment, contrarian indicator, it should be going back up, but it's been chugging along inside this range for a couple of weeks. So to me, until it breaks out of this range definitively, I'm not interested in it. But overall, I do like the DAX. Okay, and then finally in natural gas, today we actually broke the 200 period on the hourly chart. Natural gas futures, actually I guess I do need to look at the sentiment here because I forgot now how it is on natural gas. Commodities, it's right here. Natural gas futures. So natural gas futures is actually, now this is interesting because it had a much different ratio yesterday. It's at 44.56. So to me, this is not a market I'm interested in, 44.56. So I probably will not trade natural gas because of that. So I'm glad I looked. Here's copper, 93.7. So that's why I'm looking for shorts in copper. 93% long, only 7% short. Again, contrarian, that means you want to look for shorts. And then for the German, this is the DAX, or the close, okay, 22% long, 78% short, which is why I said I'm looking for longs here. So we're going to forget about natural gas right now. So for now, we'll just clear this chart. Okay, we'll just clear this chart and just leave it. Okay, so easy, right? And then for the DAX, again, sentiment says this should be going higher. So we'll see. But again, as long as it's trading inside of this range, we're going to just leave it alone. All right. So that's the wrap, guys. We did a bunch of stuff on Forex and just talked more about client sentiment and, again, more specific steps on how to use that contrarian indicator. And again, the website, if you want to use this, is forexclientsentiment.com. Okay. That's where I get it. It's a free site. No big deal. Okay. So you want to be able to just follow those simple steps. And then for futures, again, if you want to use market sentiment and use it on assets that where you can get market sentiment, fine. If you just want to do technicals, this is a great way to do it using the 200 period SMA, and just use the SMA either as a pullback point for retracements, or if price breaks through, that's the area where you want to keep a close eye. Is the trend going to continue, or is it going to be a real shift in the other direction? So the 200 SMA is a good indicator just for trend following. It's and it also is pretty good at just pointing out these consolidation areas that you just want to stay away from. Okay, because you can see it is price is still underneath the SMA, but the SMA isn't cutting through the price. It's very easy to see this is a consolidation area, and you just want to stay away from it for now. So all right, guys, so make sure you smash the like button, subscribe to the channel. Questions or comments, leave them down below. Sorry this is a long video. We're at where are we here, 29 minutes. It's not too bad. All right, guys, have a great weekend, and I will talk to everybody soon. Thanks.